What's happening, crypto fam? Happy Wednesday. Good morning and welcome back to Love for Crypto. I'm Scott. It's a pleasure to have you here. I appreciate you taking the time out to consume the content, so thank you. 2 days ago, the 7th of June, the Bank of England published a new discussion paper on new forms of digital money and summarising the responses to the 2020 discussion paper on central bank digital currencies. This is massive steps forward, massive movements forward. The discussion is absolutely huge. It takes about an hour to read, at least. You know what my reading's like. But the news release isn't as long, so I'm gonna go through the news release, bit of an overview. I'm going to drop the links in the description, the news release, the actual discussion. It's a beast. If you want to go and have a look at it, I was having a little look last night, and thanks to June for sending it. I need a proper look tonight, hopefully. Might even have a little time to go a little live, do some keyword searching, maybe mentioning some ledgers. But let's see. So, the news release. The Bank of England has today, on the 7th of June, 2 days ago, published a discussion paper which aims to broaden the debate around new forms of digital money and seek views on the bank's emerging thoughts on the subject. These new forms of digital money could be publicly or privately provided. The central bank digital currency is a term used to describe the digital form of central bank money. A stablecoin describes a digital token issued by the private sector which aim to maintain a stable value at all times, primarily in relation to existing national currencies. Their stability of value is what distinguishes them from other digital assets using new technologies. For the purpose of the discussion paper, the forms of digital money in the UK that are considered to be systemic are those that have the potential to scale up and become widely used as a trusted form of sterling-based retail payments. For all stablecoins deemed as systemic, the bank's expectation for them is to be stable in value at all times and offer a one-to-one redemption with a robust legal claim. Excuse me. Governor of the Bank of England, Andrew Bailey, said, "We live in an increasingly digitalised world where we make payments and use money is changing rapidly. The prospects of stable coins as a means of payment and the emerging propositions of CBDCs have generated a host of issues that central banks, governments and society as a whole need to carefully consider and address. It is essential that we ask a difficult and pertinent questions when it comes to the future of these new forms of digital money." The discussion paper published today considered the following issues. Now we have a list of paragraphs, not as long as what the discussion paper actually offers, but still fairly long. Again, feel free to read the actual discussion yourselves. I just haven't got time this morning. I will find a bit of time to go through it tonight, maybe live, maybe do pre-recording, maybe cover it again tomorrow, but we'll see. So the discussion paper published considers the following issues. The role of money in the economy. The paper examines existing forms of money and their uses. It considers the conditions under which new forms of digital money might be preferred to existing forms. The two forms most commonly used in the UK by household and non-financial businesses are central bank money in the form of cash and private money, mainly in the form of commercial bank money, which is commonly understood as people bank deposits. The paper also examines how any move towards new forms of digital money could impact the financial system and wider economy through the lens, of money and credit creation. Fundamental questions across a range of public policy objectives. The paper highlights the bank's close work with other UK and international authorities to understand the challenges and opportunities presented by systemic stablecoins. In addition, the bank has reiterated that it has not made a decision around CBDCs, but is actively exploring the opportunities and risks of doing so. It will be guided by its core objectives, maintaining monetary and financial stability. The paper goes on to highlight a number of public policy considerations, such as access to cash, declining cash usage, how new forms of digital money can support innovation in payments, possible financial inclusion and data protection implications, potential competition issues in the market for new forms of digital money, and the ability of users to switch between different services. Thirdly, an illustrative scenario for the demand for new forms of digital money modeled by bank staff. New forms of digital money are not yet widely used in any economy, which means it is difficult to assess their demand. and under what conditions they might be widely held and used. Equally, commercial banks have never faced a large-scale system-wide displacement of deposits they create. Quick thought on that: teach people what money actually is, and you're fucking damn right they'll want another form of it, mate. Damn right. In the illustrative example, a fifth of all UK retail deposits transfer to new forms of digital money. Factors such as convenience, trust, and perceived safety are assumed to play a key role in determining demand for new forms of digital money. I say all the time, make no mistake, convenience always wins. In the end, it will. As a result of this potential outflow, commercial banks would have to adapt their balance sheets in response to maintain their current liquidity ratios. An increase in banks' funding costs is assumed to increase rates on new bank lending, while some borrowers may find it cheaper to seek credit opportunities in the non-bank final sector. While the overall impact on lending rates and credit provision is relatively modest, there is a huge range of uncertainty around the illustrative scenario. Uncertainty around demand for new forms of digital money is why the bank is considering the need for limits to manage the transition period as they emerge. The bank will do more work to decide if they are necessary and how they would fit with other objectives, including discussions with government and other authorities. The implications for macroeconomic stability. The paper has 5 issues arising from new forms of digital money that can create both a number of opportunities and risks for economic stability. These include public confidence in money and payments in the financial system as a whole, banking sector liquidity resilience, credit conditions, money market functioning, and the implementation and transmission of monetary policy. The regulatory environment. Regulation lays the groundwork for innovation and needs to be clearly established before a systemic stablecoin could safely operate in the UK. In January, Her Majesty's Treasury consulted on the UK's overall regulatory approach to crypto assets and stablecoins. Today's discussion paper builds on that work. The Financial Policy Committee previously set out 2 expectations for systemic stablecoins. The first addressing the financial stability risk associated with payment functionality of stablecoins. A stablecoin-based payment chain should be regulated to standards equivalent to those applied to traditional payment chains. It's extremely fucking interesting. We're not quite through it yet. I feel we're behind China immensely. And I feel as soon as 2008 hit with a financial crisis and Bitcoin dropped, I think China started moving straight away. I think China's like, yo, this digital money shit, it's the future. And we're making CBDCs straight up. And they don't fuck about. Everyone else is like, So let's carry on. The second expectation relates to the use of stablecoins as money. Stablecoins used as money should meet equivalent standards to those provided by commercial bank money, otherwise known as bank deposits. The bank's view is that to meet this second expectation, of course, that features of the current bank regime need to be reflected in any regulatory model for stablecoins. These models include capital requirements, liquidity requirements, support from the central bank, and are backstop to compensate depositors in the event of failure. The discussion paper explores a range of regulatory models that could address both payments related and money creation risk. The bank will consult on any specific regulatory framework that would apply to stablecoins, informed by responses and pending the outcome of Her Majesty's Treasury's consultation on stablecoins. The bank has today also summarised responses to its March 2020 discussion paper, Central Bank Digital Currency Opportunities, Challenges and Design. Respondents to the discussion paper showed strong agreement that the bank should, at the very least, be carefully studying CBDCs. Even if there was a range of views on whether one was ultimately likely needed or desirable. While views varied among respondents, there were some areas of significant agreement where a large majority expressed a similar view. The bank therefore has identified 5 core principles from the responses which will guide its future exploration of CBDCs. These include financial inclusion at number 1. It should be prominent consideration in the design of any CBDC. Any CBDC should have a high degree of accessibility to people regardless of their geographic location in the UK, age, socioeconomic status, digital skills or disabilities. 2. A competitive CBDC ecosystem with a diverse set of participants will support innovation and offer the best chance to deliver the benefits of CBDCs. Respondents agreed the bank should provide a minimum level of infrastructure for the system to be reliable, resilient, fast and efficient. The private sector should take a leading role in responding to the needs of the end users. In assessing the case for CBDC, the bank should assess whether non-CBDC payment innovations could deliver the same benefits. An assessment of the net benefits of CBDC should therefore consider to what extent they can instead be delivered by private sector proposals. That's very interesting. Number 4, a CBDC should seek to protect users' privacy. Feedback from respondents has emphasised the importance that users place on having privacy in their transactions. As with existing forms of digital payments, there are important legal compliance arrangements that CBDCs would need to meet, such as anti-money laundering, counterfeiting of finance of terrorism and sanctions. Subject to meeting these, banks should therefore seek to ensure that users enjoy a strong level of privacy from any transactions associated with CBDCs. 5. While CBDCs should do no harm to the bank's ability to meet monetary and financial stability, opportunities to meet our policy objectives more effectively should also be considered in CBDC exploration. The bank is primarily focused on possible benefits CBDCs might bring for payments. It's also considering the possible opportunities that CBDCs may offer for monetary and financial stability. The response to this discussion paper will help inform the bank's thinking on the issue and will support the ongoing work of recently announced CBDC task force engagement and technology forums. If you were on the overview that I've just read through, if you go to the bottom, there is a right few links at the bottom. Everything from the actual discussion to the summary of responses to the discussion paper. The March 2020 discussion paper's there. A CBDC task force engagement, further information's there. The Financial Policy Committee December 2020 Financial Stability Report chapter on systemic stablecoins and financial stability is there. And Her Majesty's Treasury consultation and call for evidence on UK regulatory approach to crypto assets and stablecoins is also there at the bottom. Plenty of reading regarding the Bank of England, Central Bank Digital Currencies, where they're at, where they're going, what they're thinking. Plenty. So if you want to know, there you go. Now, a CBDC should seek to protect users' privacy. Got to pass on. Why did he talk Like, you can't launder money with cash at the moment. Like, they've got it on lock. Like, they talk like the current system's on lockdown. It's all like, oh, yeah, mate, but, you know, if you've got to use another currency, you've got to make sure it passes the anti-money laundering regulations and this and fucking that. What does that mean, mate? That you can still fucking launder it, but it's hard. You can still launder it if you know how. Because that's your current fucking system. Gets laundered to shit. Dirty money everywhere, mate. So you're talking out your fucking ass, mate. You're talking out your ass. If you think cash passes anti-money laundering fucking regs, in my head, it might pass your fucking regs, but it ain't passing them in my head, because it's dirty fucking money. So at all time, understand, I get some people use large amounts of cash. Some people want to use cash. We talked about this with June the other day. I understand it, I get it, and I know I generalise a lot, and apologise for generalising, but you know when I say everyone, most people, I'm talking like the general population of fucking idiots, not normal people watching me and shit. You know what I'm getting at? Talking about the fucking penguins, mate. Or sheep, whatever you want to call it. The ones asleep. Now, it's interesting. The bank's looking at what non-CBDC payment innovations can deliver with the same benefit. So, delivering the CBDC, I'm fucking telling you, I see tokens, me, not just one CBDC. I can't imagine. I imagine a CBDC of GBP. That will be the central bank sovereign currency of the UK. A CBDC, a GBP CBDC. Now, it doesn't mean that they can't have issued tokens pegged and collateralized with them CBDCs, and then have issued tokens and stamps. Saying stamps kind of lets most people know what I mean. I mean food stamps, I mean rent stamps, I mean fucking car insurance stamps, I mean baby nappy stamps. Specific stamps, like, yo, you're getting this for fuck all, mate. You can only spend it on that. See, people think this basic living allowance is going to end up dropping through at like £1,000 a month cash. Like, no. Possible, but highly unlikely, mate. Yeah. By the time the basic living allowance comes out, and the people not earning over £1,000 a month are given £1,000 a month, around £300 to £400 of that is going to be GBP. The rest will be IOU, tokens of GBP value for you to spend on products and services that you need to survive, that you need to provide your family. Yeah, you get what I mean? Your universal credit at the moment gives people, say, £3 to £1,000 a month, depending on your circumstances. It's just that payment, but it needs upping a little bit. It needs changing. We need to lose the benefit and income, fucking income credits and benefits and all this shit. It's just allowance. Like, no human asked to come here, and if they did, they can't fucking remember asking. And to be dragged into a rat race just to survive, it's naughty. So I believe every human deserves a shelter, clean water and food. And beyond that, it's on them, it's up to them. But to be dragged into this rat race and be like, right, you've been born in England, you're fucking doing that, you these are the laws, these are how you live, these are what you got to do, put your mask on and shut the fuck up. It's like, what? Get to fuck. I actually don't want to be here anymore. I was about to move to somewhere else where they can live how I want to live and not how fucking you want to live. We need a democracy of consensus. I can see mass segregation in the future, me, of people just saying, I want to live with motherfuckers like that. I don't want to live near people like that, and I don't want to live near people like that. Social score, get the fuck off the bus, get off the plane, and fuck off, you horrible bastard, because I don't want to live near you. I can see it happening. It's all coming in now. Cancel culture, social scores, the fucking chips. Don't get me started. All these people who say they don't want a chip in their hand and you don't want a chip in your head, I pray to God that you never need an advanced hearing aid, because you're getting a chip in your fucking head, mate. And not just a chip, a microprocessor, an actual mini computer put in your fucking head, and you're bitching about a little fucking near field connection chip in your hand. Wake the fuck up, man. I can't even remember the name. Conchial implant or something like that. It legitimately is. It's here somewhere. One sec. It's here somewhere. Or at least I thought it was. I'm extremely interested in seeing what happens towards the back end of summer, all next year, and running up into the ISO migration of 2023. What they was always saying, oh, we'll have the ISO migration done by 2023, we'll have this, like that. Because I truly believe after that migration, the CBDCs, the stablecoins, the central bank ledgers and all that, they will take off. I mean, I know there's the odd few, China and Brazil are really making some moves, and some are going to get ahead before them. But I mean, in 2023, the majority of central banks by then will be moving forward with central bank digital currencies, with issued stablecoins and tokens on the ledgers. Whether it's all going to be public, private, whatever, they're going to build on it. They're going to build out from it. And they're just basically looking at the roles of money and how people see it. Yeah, they're looking at financial inclusion. They're looking at privacy. Looking at regulatory clarity. They're looking at what non-CBDCs can do and what CBDCs should do. It's extremely interested. And we have only read the overview. Make no mistake, man, if you go on that discussion, it is going to take you a while to read it. There's going to be graphs and all sorts in there, and there could be some nice bits of information, who knows. I'll have a little deeper look in it later on, but for now we have to go to work. It's my level up day today. I've reached level 37 in this game of life. Level 37, man. I just hope that by the time I get to level 50, the end game content's sick. Do you know what I mean? Because I'm not liking. Well, my level 30s has been better than my level 20s. I'll tell you that for free. We fucked the life up in the 20s, and we're clawing it back slowly but surely. It's unbelievable that, like, in the 10, you spend 10 years fucking your life up. It then takes 2 or 3 to realise you've fucking done it, and then another 10 to get the fuck out of it, depending on how big you dug the hole. Roll on the next 3 years. I can't wait to be 40. It's the new 21. Yeah. 50's middle age these days. Remember that. I better get to work. Guys, invest in yourself. Invest in the internet of value. Turn hobbies into revenue. Live long and hodl a lot till you're ready to let it go. Wishing health and happiness to you and yours. Seriously. Take care. We love crypto. We love CBDCs when they finally drop. and we love you. So take it easy, take care of yourself, and enjoy the rest of your week. I'll see you on the next one. Peace.